What is up, everyone? I have to give Benzinga a huge shout out for that awesome intro video that they made for me. So thank you guys for doing that. This is the TrendSpider Chart Roundup for Monday. If you guys watched on Friday, we did some charts, and a lot of the charts we'll be touching on haven't changed that much since Friday, but we do have some updated charts to go over. We'll go over some new ones. If you guys have any requests, shoot them in the chat. I'll try to get to them. We have quite a few charts to go over today, so I may not get to them, and it's not because I don't want to look at your chart. It's because we only have so much time. We have an hour to go over all of these different charts. So if you do have anything, I have my phone right here. Anytime you see me looking down, I'm just looking at the chat to see if you guys have any charts that you want to see. But the way we always start this is we want to look at the broad markets. We want to look at a top-down approach and see what's going on at the higher level, you know, the overall markets, how are they looking? And starting with SPY, I mean, we've got a really strong move today. And the one thing that I want to focus on here, and let me zoom in my chart a little bit so you guys can see it a little better here. That's probably too much. It's probably better. So the thing that I want to point out here, definitely on Friday, we had a nice volume-backed breakout here. So what do I mean by that? So if you're not familiar with TrendSpider, this is your first time watching the show, the volume-backed breakout is shown by the raindrop chart on the daily candle. So what this is it's a volume-weighted candle. So it has the volume profile actually within the candle. So instead of you having to go into a 2-minute or a 5-minute chart to look where all that volume was aggregating throughout the day, you can see all of that here. And so on Friday, you can see we had quite a bit of volume profile above this 1.618 extension. So this red line here that I'm highlighting, this is just a 1.618 extension from the original measured move, which started on May 7th all the way down to that May 12th low. So the measured move was way back in May, and you can see we just got through that extension on Friday. We broke through. We've got another strong day today, and you can actually see here we kind of have this broadening formation breakout as well. So you can see here we've got this resistance. We've got this support creating this kind of megaphone, if you will. And you can see that we actually have volume once again backing this breakout as well. So really strong setups here across the board. A lot of rotation happening. We had a big move in Disney today. That definitely didn't hurt the markets, at least on SPY side of things. And I mean, the seasonality for July is 100%. That means 100% of the time over the last 5 years, July has closed green. So this is a very strong month in general. But on top of that, we're getting this breakout here on the daily chart through this 1.618 extension, something that a lot of people use as their levels above, especially when you don't have anything else to look at. As we hit new all-time highs, we don't have any pivots. We don't have any previous price action to look at. It's just these 1.618 extensions. So the next one, the 2.618 extension, is right around 453. Now, if you look at the weekly chart, this is why I personally think we're probably going to go relatively quickly to the 450 area above. You can see this is a longer term trend line going back from March of 2020. We've tested it multiple times here. And a lot of the time, what I like to do is I kind of like to create a parallel line here. So you'll see if we use these two lines more of a zone, you'll see that this definitely could be getting close to another area of resistance right around 441, 442. But I do think we probably will melt up to the 450 area. That's just my opinion. Don't take that, too seriously. Everyone's got to do their own DD. But, the market is just looking very strong right now. You still have, I think, capital flowing in from crypto, getting into the stock market. So as we get up towards this area, the 442 to 450 area would be a target above on the weekly candle. So really looking strong there. Now on the Qs, we are trading right at this 1.618 extension here from that February down to that March low. So the measured move here is just that February 15th high to the March 1st week of March 1st low. And so you can see we literally tagged almost perfectly that 1.618 extension last week, missed it by, I don't know, like 40 cents or so. So it's not going to be perfect. And that's why you always want to use a zone rather than an exact price level. So this is where the sensitivity alerts come in really nicely. you're able to create this zone rather than just looking at 363.37. You always have to have a little bit of margin of error around that, and that's exactly what this sensitivity feature does. So remember, I am using TrendSpider. All of these things are on TrendSpider. You can try it out. This is obviously my go-to, being one of the founding team members, but just so much you can do on the platform. So that is one. Set your alerts, forget about it, let the price action do its thing. Now on the daily candle here, we've got this really, really narrow and tight ascending wedge here. And I mean, if we continue to move up tomorrow, 365 to 366 could be in the cards. And it was a relatively strong day today, even though the candle's not that strong. We did gap up, we pulled back a little bit, filled that gap, and we did close close to the high of the day. So all in all, a pretty strong day for the Qs, strong day for SPY. Now, another one that we want to look at, obviously, is IWM. Small caps are looking pretty good as well. The main thing here is just the fact that we have been range bound for literally 6 months now. So pretty much we could stay range bound for longer. We'll have to see. Now, on the weekly chart, this is where things get interesting for me. This is why I'm very bullish on small caps right now. We've got this volume by price that we are going to anchor from the COVID lows. If you've been watching a lot of the content I've been putting out on here, but also on the TrendSpider stock trading pit, I haven't changed this anchor point. This is still a very relevant trend reversal point. And you can see how much volume is now holding up here. And obviously this is a function of time. So the longer that the price action trades within this area, the more volume you're going to have. So that's not necessarily anything too shocking. But when you do have these areas of high volume shown by this anchored volume by price, you've got the volume shelf that forms. That's what I named it. It looks like a shelf to me, and it's a shelf of volume, so the volume shelf kind of stuck there. So we did have a little bit of a pullback through that support line last week, but we did close pretty strong. The weekly candle so far is looking pretty strong. We're bouncing right off that point of control here. So all in all, if we get this breakout, we could really start to move quickly. Small caps have been just stuck here, as I mentioned, for 5-6 months, maybe even a little longer at this point. So if you were to ask me, I think it's going to resolve to the upside. Doesn't mean it has to, but just based on the technicals, everything is showing definitely a continuation higher. Now, one thing that I'm just curious, one thing that you can do as well, you can always anchor the VWAP from a different point. You don't always have to anchor the VWAP from the COVID low. So in this case, the reason why I anchored a VWAP from this breakout candle is that's when kind of the status quo changed. That's when we broke out. That's why, that's sometimes when, sellers may become buyers now because we broke out. So you can see here, if we did break down, because you always have to have the bearish and the bullish view. If we did break down, you definitely want to watch for that anchored VWAP below around 214, 215. And you can see that's been tested a couple times, or almost tested perfectly a couple times. And as I mentioned, as always, that's why you want to have some margin of error around your levels. So you can either do that with the alert, as I mentioned before, or something that I like to use a lot is what's called the anchored VWAP handoff. So, excuse the anchored VWAP handoff. What am I talking about? We'll go over the anchored VWAP handoff, but that's not what I'm talking about. I'm talking about the percentage offsets here. So something I like to do is add an offset to an anchored VWAP I'm looking at, especially if you've got points on the chart. So let's zoom in so you guys can see this a little better. Notice here, you got this area here, you've got this area here, you've got this area here. They did not actually test this original anchored VWAP. So I'm going to make this original anchored VWAP, let's make it a really obvious color like this orange. Or no, sorry, that's the first one. Where's my actual anchored VWAP here? There we go. So we'll make this green. So you'll see here that the original anchored VWAP is down here, and we actually have not tested it yet. We've gotten very close, and that's why I like to use these offsets, because you can see how well this offset really captures some of that price action around the anchored VWAP, but not necessarily right at it. So all in all, I'm really liking the setup here on IWM. I'm pretty bullish on small caps right now. One of my biggest positions is a small cap name. I'll go over that as well. But just looking at the top-down approach, we're definitely still looking pretty strong going into the rest of July and August. Now, let me look at some comments here just to make sure I haven't missed anything or any questions. Yep. So IWM is top watch by Joseph. I would agree. I mean, if we break out, this is when new buyers are going to step in and we could really get a pretty strong move to the upside. Now, before we move on to some individual names and some requests by you guys, let's look at Bitcoin. Bitcoin is not looking great. I just think, honestly, at this point, crypto is dead money. I don't have a position in it, so I don't really care where it goes. I mean, obviously, you can never be biased, even if you're in a position, but especially with crypto and Bitcoin, I have no interest in it, or as far as monetary interest in it. I love charting it and showing people another perspective, but as far as actually, being involved, I'm not in crypto. It's never really been my thing. I personally think crypto is probably headed at least down to the COVID low anchored VWAP, which is right around this 26.8 to 27K area below. So you can see that's just shown by this blue line here. So I'll make it a little thicker for those that want to see exactly where that is. Right around that 26.7 to 27K is where this possibly could go. We'll have to see, but I just think there's still too much money tied up in here, and you still have not had that capitulation event for crypto. So all in all, Bitcoin not looking great. I do think some of that money is going to continue to flow out of crypto into the markets as it has been over the last couple months. And then on Ethereum, the main thing that I'd be watching here on the weekly chart, and I mean, a lot of the time this daily price action is just noise. You really want to look at the longer term areas here, especially on this big of a trend. You can see that we are still above this this trend line here, this green trend line. If we do start to break below through that, I highly doubt I'm the only one watching this trend line here. So once again, technical analysis can be very self-fulfilling prophecies type of action here. So if we start to break down, a lot of people are going to see that breakdown, and then that could actually add more selling, and that could really start a bigger waterfall maybe to the next level here. I would say around 1,300 or so. And the reason why I came up with 1,300 is simply because this was your previous area where we first hit resistance and then acted as support before the next leg up. So if we did continue down on Ethereum and broke down through this line, that 1,300 to 1,400 area below would be my target just for at least the short term. So all in all, that is kind of an overview of the broad markets. One thing that I wanted to go over today was Disney. Disney was a great case study on using the anchored volume by price as well as the anchored VWAP. So Disney was a big mover today. I had a price target of 184 for this week, and we hit it pretty quickly, mainly because we had this volume gap above. So notice here where you don't have a lot of volume. We're going to highlight this orange. There's not a lot of liquidity above, so you don't have a lot of friction for the price to have to move through until you get to this next break-even supply area. So we launched off this volume shelf. It took an extra week. I thought Disney was going to make its move last week. We had a little bit of a flush there before the move up. And so classic, right? Let's flush Disney, get everybody out before we come out with good news, the next week. Shocker. So all in all, we moved right up to this anchor VWAP from this swing high, pretty much the all-time high candle. We did close a little bit above it. However, we are going into some pretty heavy break-even supply here. So that's initially going to act as resistance because let's say that you got in Disney a little early. Let's say you got in at 186, 187, and you're back to break even after dealing with a drawdown to 167. You may sell some shares once you get back to break even, raise some capital, put it to work somewhere else. And that's exactly why we call this break-even supply, because it's people who are back to break even are likely going to at least maybe sell some, maybe sell their whole position. It's probably not everybody, but it's going to be enough to add at least a little bit of supply on the market initially. So that's why I think we're going to have a little trouble probably getting through 186, 187 short term, but I do think Disney, by the end of the year or much earlier, could easily be back to its all-time highs or hitting new all-time highs. So a really strong name, especially to start the week here. And I just think Disney is really a solid company, both on the fundamentals, but also the technical setup looks really great as well. To answer your question, Abdullah, I'm using TrendSpider. So that's the platform I'm using. If you want to add the volume by price, you just go to the indicators here, click the 3 dots, type in volume by price, click on it, it will pop up. Now, if you guys are interested in the settings that I'm using for the volume by price, I'm using 50 columns. I'm manually anchoring the volume by price. So I'm moving this vertical line to these swing lows. So you can see by this that swing low annotation there. And then I'm obviously turning the columns on so we can see the volume by price. I'm using the column opacity all the way to the right, which means those lines are going to be very dark. You're not going to be able to see through them. And that's all I have on. Keep it really simple. I don't need the point of control. It's very easy to see what the point of control is without highlighting it. It's just this huge, this volume node right here. So that's what I'm using. I'm using 50 columns, volume by price as the indicator, and you can easily just go to those 3 dots and add it. So that is how you can add it on TrendSpider. Next one that I want to go over is Tesla. Tesla is finally starting to get through possibly this anchored VWAP. You can see that we are breaking out of this weekly symmetrical triangle. And one thing that I'll mention here is, let's go to the daily chart first, and we'll kind of see what's going on here. So it's not a shocker that we did move right up to this volume by price break-even supply above. So I'm anchoring the volume by price from this swing high. The reason is because if we anchor the volume by price from the swing low, we're not really, in this case, you can see there's quite a bit of volume here. But a lot of the time, if you've only had a couple candles here forming, you're not necessarily going to see how much volume is here. So that's why I like to move it back to the swing high, and you'll get more volume data here. And you can see here that, you know, we moved up right to this supply zone above. Last week was a really great case study on using the anchored volume by price and the anchored VWAP and the volume gap. So last week was a classic breakdown. So initially we did look like we were possibly going to move up off of this volume shelf. You can see that the price was trading right at it. But then once we started to break down, that's your sell signal. Once you broke this low of around 668, you had a gap below and you had this volume gap below. That was your signal to get out, at least in the short term. So we went through this volume gap. As I mentioned, the volume gap is just an area where you don't have a lot of liquidity below. You can see that there's just not a lot of volume bars here. So we moved down right to the next area of volume, which was also right in line with this anchored VWAP from the swing low, had a nice bounce, moved up from there, and now we're stuck at this supply zone, at least for now. If we do start to break through this and close above it, we can move pretty quickly actually through this next volume gap here to let's say around 720 to 732. So definitely keep those in mind, 730 to 732 if we do start to break through this supply zone. If I were to guess, it may take a little time to for the market to digest some of this supply. We'll just have to see, but all in all, a really strong 3 days. And the volume gap works both ways, right? We moved very quickly down through the volume gap, but we also moved very quickly back through the volume gap just as easily. So this area where there's not a lot of liquidity is essentially an air pocket for volume, and there's not a lot of supply. So it's really fascinating. If you guys haven't started using the anchored volume by price and the anchored VWAP together, I would highly recommend it. It is definitely going to be one of the most powerful combinations that you can use in technical analysis by far, just because it's raw supply and demand. It's not looking at the RSI. It's not looking at anything other than true supply and demand in the market, and that's why it's so powerful. So as far as Tesla goes, as I mentioned, 730 to 730. Actually, sorry, 730. I'd say 730 to 736 would be your area above to watch if this does continue to move up. Next one here is UPST, another great example of prices respecting these anchored VWAPs and these volume by price levels. So UPST on the daily side, at least, we moved up right to this swing high and this swing low anchored VWAP here. So you can see we moved up right to that 130 area. The main thing that you want to see here is actually a close above 130.50 to 131 or so. And so this is definitely something that has been tested over the last couple weeks, and you can see that we did pull back at least short term every time that we did test this area. But this is the first time that we've actually closed right at it. So this time definitely could be different. Now on the weekly side of things, you'll see here that we did have this huge volume shelf forming here that was really right in conjunction with this longer term support trend line. So if I move it, and if you guys are familiar or if you guys are curious, you can move this anchored volume by price and you can start it from different points. So I want to move it all the way to the left and start it from the IPO candle here. And you can see since the IPO, a majority of volume is holding at this current price level, and that's how these volume shelves kind of create these launch pads for prices. So UPST is probably one of my favorite stocks going into the next couple weeks, and we'll just have to see if we do get that continuation. The main area that you want to watch would be these 3 candle highs right around 135. So you definitely want to see UPST clear 135 to really get going on this particular one. So that is UPST. Do program the strategy. We have a strategy tester and we have a scanner to find the volume shelves. Yes, you just go to the market scanner, just type in Jake's volume shelf scan, and it will pop up. It's on the library for all TrendSpider users. I don't know how easy it would be to test it, but I can definitely tell you from personal experience, volume shelf, anytime the price is trading at a volume shelf or right above it, I would say the win rate on a continuation higher is well over 65–70%. So just from using it a lot, it definitely has a very high win rate. And you have to remember, anytime the price is below a volume shelf, it's going to act as supply. Anytime the price is right at a volume shelf or a little bit above it, that's when it's going to act as kind of a volume shelf for the price to move up higher. So to answer your question there, Turan. So yes, let's definitely keep this one on the radar. I think this thing has just started. Even though it's up 8% today, I do think this is probably a longer term pivot here, possibly to even test the highs around 190. We'll just have to see here. Going into the next one, Viacom. This is one that a lot of people are watching right now. The way I'm looking at Viacom here, one, on the weekly side of things, if we anchor the volume by price from this swing low, you'll see here that we've got this rounded bottom forming. We've got this huge volume shelf here. So this is kind of your base that's forming. And you can see if we do bounce off of this area, the main area that you want to get through would be this 49.50 or so area. So that's the anchored VWAP from this all-time high candle. And you can see here that we haven't tested it yet, but if we were going to continue to move up, that 49.50 target would be your level to watch above. And that would just be initial supply. It doesn't mean we have to stop there. But remember, if the price is getting back to the volume-weighted average price from the highs, you're going to have some people break even sell. It's just part of how it works. If you've ever probably experienced this yourself, or you've talked to somebody else, they're like, oh yeah, I'm down right now, but as soon as I break even, I'm going to get out. Well, that's called break even selling. People deal with a drawdown, they deal with an unrealized loss, they get their money back. As soon as they break even, they get out. That adds supply into the market, and that's how it becomes resistance. So, hey, Creighton, my number one hype man. I love you, man. Good to see you in here. So let's see. Sorry, I'm just going through these chats because I don't want to miss any questions. What are the gray bars on the right chart? These are volume. This is volume by price. It's measuring the volume as a function of price rather than a function of time. So we're looking at, since this COVID bottom here, where have shares been transacted? Where are they kind of holding? And so you can see since this low, a majority of shares are holding right here. So all you need is supply to dry up. Why does supply dry up? Because if everybody's holding at break even and there's no more supply on the market because nobody has any profit, that's how you get the move. I always talk about this. There's a fallacy in the market that you need demand to really move prices. Partially, yes, but you can have prices move up simply because supply is drying up and the price has to move up higher to find sellers. So a lot of the time, these moves can actually simply start by supply just drying up and the price starting to move up. Then you get, your technical traders coming in, seeing the price move up, and then that's where your demand comes in to further move the price higher. So that's kind of how these volume shelves work. To answer your question, Turan. Now on, let's see. Sorry, I'm just going through these. Could you give your thoughts on CCBI? I will try. So that's Viacom. On the daily side of things here, we do have a pretty nice ascending triangle here. So if I turn off the volume by price, we don't really need it because we already know where the majority of that volume is holding. The area that you definitely want to watch, as I mentioned before, not only is this area an anchored VWAP above, but it is right in line with this previous resistance, which would be your ascending triangle resistance above. So right around 49.50 would be the target above. So keep that in mind for Viacom. I know a lot of people got in a little early. That's fine. It won't really matter if this thing starts to break out. So unless you're buying weekly options, and then that's I'm not gonna say anything. That's a very gambling heavy type of approach, buying weekly options and having no plan. Keep in mind, if you're looking at somebody's chart or you're looking at your own chart on a monthly candle or a weekly candle, these are the charts that I usually look at for swing and position trades. You don't want to look at the weekly candle, then end up buying next Friday's expiration, strike 10% out of the money. That is, maybe it will work 1 out of 20 times, but overall, that is not a winning strategy. And weekly options, there's a reason why people do Lotto Fridays, because they know that they're probably going to either lose or they're going to make a couple 100%. There's no really in between there. So just keep that in mind. I've seen a lot of people playing these weekly options and wondering why they keep losing. You don't have a lot of margin of error when you're trading weekly options. It's a lot of the time, kind of gambling. So that's all I'll say about that. Next one is Goldman Sachs. And yes, I am going to start taking requests here, guys, but there are a couple of stocks that I did want to go over and just kind of look at the overall setups. So one thing that I will mention here on the monthly chart for Goldman Sachs, and hold on, let me pull up this chart. So we've got the Williams percent range. Let's do, where are you? So I'm looking at the 12-period Williams percent range. Why? Well, there's 12 months in a year, so that's why I'm looking back essentially on the yearly Williams percent range. But also check out the where are we? Relative volume, where are you? There we go. So the relative volume as well is something to keep in mind here. So Goldman Sachs and really financials in general, keep this in mind as some of these financial names do start to report here. So obviously Goldman Sachs has gone up quite a bit this year. It's up about 45% on the year. And that is very unsustainable, especially for financials. I'm not saying they can't go higher. I'm not going to go and try to short Goldman Sachs because I found this kind of signal. But it is worth keeping in mind that we are seeing some divergence here. So notice here we've got these higher highs back in 2015. We've got these higher highs back in 2018. And now we've got these higher highs once again after a pretty big move. But notice what you're seeing on the Williams percent range, which is one of the few oscillators that I will actually use. I really don't use lower indicators that much. A lower indicator is just an indicator that's an oscillator, or it trades, or it's below the price chart. Now, if you're using a moving average, that's an upper indicator because it's interacting with the price. So all in all, you've got the higher highs. The last two times, we had a pretty strong move to the downside. In 2015, we went from 208 all the way down to 140. Here, when we finally got that divergence to materialize, we went from around 268 all the way down to around 152. And so now we're here again. Right now, it's showing divergence. Could this break to hit a higher high here on the percent range? Absolutely. But one thing that I'll point out here is the fact that anytime you've got this divergence forming, look at the relative volume. You'll see every time that we started to lose momentum, we had the relative volume starting to drop below the 20-month average. So you can see here, every time that we had this forming, you also saw the relative volume falling off, which means there's not as much volume taking place. So you can see that over the last really 4 months or so, the relative volume has been dropping. You don't have as much volume, and that is definitely a red flag as well. On top of that, 1, 2, 3, 4, 5, 6, 7, 8. This would be the 9th green month in a row. So keep that in mind as well. It's definitely overextended. As I mentioned, I'm not going to go try to short Goldman Sachs, but I sure as heck probably wouldn't go long at this point. So to each their own, just something I wanted to point out for those that are looking at financials. You know, take it for what it is. It's just one view out of a million, honestly. So that is Goldman Sachs. Let's go into a smaller cap name. A lot of people are trading BBIG right now. This is one that I liked for a couple reasons here. One, if you look at BBIG on the monthly chart, you can see here that we broke out of this symmetrical triangle intra-month for the month of June, but we actually closed right at resistance. Now, if you look at the raindrop chart, you'll notice something really interesting here. You'll see, even though this is a red raindrop, a majority of the volume was above resistance. So that is something that is really, you know, showing confirmation by buyers. Anytime you have volume above resistance, that's showing that there's someone's willing to absorb that supply. Remember, you always have to have a buyer and a seller for any transaction. So, you know, you could go and say, oh yeah, well, you know, this is what I like to use, right? I like to look at the hollow candle, and I like to see, okay, look at this wick here. That's like over half of the month of June's range is this wick. A lot of people look at that and say, oh, well, that was really aggressive selling, which maybe, but then if you look at the raindrop on the monthly chart, you'll see something very different. You'll see within that wick, there's a lot of volume profile within that wick. So what likely happened was there were very aggressive buyers that came in. Once there was no more demand, or once those aggressive buyers were done with building their position, the price is able to drop, not because a bunch of sellers came in, but because the supply and demand curve shifted back into equilibrium at a lower price because those buyers are done. So you look at those aggressive buyers as your demand curve, and then you look at the supply curve, obviously, as sellers. So once those buyers are done buying, the price can drop simply because the demand goes back to where it was, not because it's a function of sellers coming in. So maybe one of these days I'll go over kind of the economic supply and demand curves for those that are interested, because that is something that you really want to understand if you're trading in the markets. Just because prices are going up doesn't mean buyers are stepping in. Just because prices are going down doesn't mean sellers are stepping in. There's two curves there, and so you have to really know all of the different combinations of these moves on the supply and demand curve to really understand price. So, oh man, that's a good idea. We should bring Kuba in here one of these days, but he'll just probably start crying, and then we won't have to do that. But I will try to bring Kuba on and have him say hello. That's my son, who's about 3 weeks old now. So thanks for the shout out, Phoenix. But BBIG monthly chart, I still like it. You can see on the monthly chart, if we do look at the hollow candles, this is really one of my favorite types of setups here, where you almost open at this wick. So anytime you have an open within a wick, that's something I like to really see. I'm not in BBIG. I probably won't get in it. I like to chart. Just because I chart 30 stocks in a weekend doesn't mean that I'm going to enter all of them, or really a lot of them. It's really hard to trade actively other than swing and position trading when you're trying to run a business as well. So all in all, just keep in mind the charts that I'm going over doesn't mean that I'm in them or going to get in them, but I can still tell you guys at least my perspective to hopefully help you out, get a secondary perspective. So that is BBIG. Turan, I will try to cover supply and demand curves at some point. I do have a couple videos on supply and demand, so if you guys want to check out my personal Twitter later tonight, I will post those videos so you guys can kind of see how those supply and demand curves work. So I'll try to do that tonight for everyone that's interested in supply and demand curves. Next one is NNOX. This is one that we touched on Friday, I'm pretty sure. One thing that we're looking at here was this this bull flag here. You can see if we anchor the volume by price from the swing low, you'll see that we had a volume shelf forming. Shocker. So anytime you've got this volume shelf forming, this a lot of the time will act as kind of a launch pad for price. That's why I call them volume shelves and I call them launch pads anytime the price is trading right at it, because it can really create that base for price. So all in all, not what I'd call the strongest close here, but we did close above that bull flag resistance. You can see that we did get a nice bounce on Friday to the top of that bull flag resistance, and then finally gapped up over it today. So a nice move if you scalped it, or if you traded options in it. Probably was a decent move, at least initially today. So all in all, NNOX still looks pretty good to me. Anytime you're closing above the bull flag is pretty solid. So let's just see what happens tomorrow. It could come back and retest this volume shelf, and you know, that may be another time to look at possibly starting a position again. Obviously, everybody's going to have their own plan there, so don't listen to me and say, oh yeah, I got to buy at the volume shelf. Everyone has their own technical criteria and conditions that they're looking at. But a lot of the time I have seen an initial launch, a pullback, and then kind of that relaunch to the upside off these volume shelves. Next one is SKLZ. This is one a lot of people are starting to talk about again. I just want to go over this for a couple of reasons. One, to show that volume shelves act as both these break-even demand but also break-even supply zones. So very similar to what we talked about on Disney, if you were looking at trading SKLZ into the next week or two, this area above, this anchored VWAP from the swing low, is right in conjunction with this huge area of volume above. So as I mentioned, anytime the price is below a volume shelf, a break-even supply area, it's going to act initially as supply once the price gets back into this area. Why? Because if you bought SKLZ at 1930 or 1925 and you just dealt with a drawdown to 1680, you may think about selling some of your position or all of your position once you get back to break even. Not everybody's going to do this, but if you have enough people doing it together, that's where your supply comes in. That's where it becomes initially resistance. Although a lot of the time what happens is you get the move up to these break-even supply zones, you get a little bit of a consolidation just from the market digesting supply, and then you get your next continuation up. So just because you have initial supply above doesn't mean that, you know, it can't go higher. The market just has to digest some of that supply initially. So that is SKLZ. Let's look at Wish. This is another one that a lot of people are in right now. I have a very, very small position. I'll probably stop out here if we go much lower. It's a very small position just to kind of, you know, if I was going to buy it, this is the time to buy it. We're anchoring this volume by price from the swing low. We're trading right at the volume shelf. There's not a lot of volume above until you really get back up to the 13, 14 area. Now, the initial area that you're going to probably want to focus on would be this swing high anchored VWAP here, right around 1260 or so. So remember, anytime you've got this area that I'm highlighting in green where there's not a lot of shares above, if you guys were, you know, watching earlier, Tesla was a great example of this. You can move very quickly through these low liquidity areas above. Your anchor VWAP would be your initial target around 1260, 1275. Then if that continued up, your next target would be around 1380 to around 14 bucks. So that is Wish. Hopefully that was helpful. I know a lot of people are trading it. I think a lot of people are stuck in it, to be completely honest. That's one reason why I didn't get in a very big position. I think there's too many people in this trade right now, and sometimes you need a capitulation event to kind of reset the supply and demand on this. So all in all, if we look at the 4-hour chart, anchor from the high here. Don't ask me why I'm using the 4-hour chart. I usually don't use it, but in this case, it has been a great time frame to look at Wish on. And so, as I mentioned before, even from the swing high, there's a lot of volume here, and we could move pretty quickly, you know, through this area above. And in this case, you could see 1220 to 1235 would be a supply zone before you got to that anchored VWAP. So you can always anchor these volume by prices and VWAPs from different points. You're just anchoring them from capitulation or reversals in the trend. Capitulation at the top would be capitulation of shorts. Capitulation at the bottom would be capitulation of longs. What does capitulation mean? It just means that the longs and the shorts are getting liquidated at that point. So Boeing, yeah, Boeing's been mentioned a couple times here. I'm still kind of going through the list that I had, but we can go into Boeing because this is one that I do like as well into the week ahead. So you guys are going to get tired of volume gaps and volume shelves after this episode, but that's what I trade. That's what allows us to see supply and demand in just such a visual way. You can't not use these. So all in all, looking at Boeing on the weekly chart, you can see that I've anchored the volume by price and the anchored VWAP from the swing low here. You can see last week that we closed above it, and we did open right at that area. And so same thing that I've been talking about, these volume gaps, you don't have a lot of liquidity above until you get to this next break-even supply zone around 250 to, let's say, 252. So if this finally does take off into midweek or into the week, this can move very quickly through the volume gap because you just don't have a lot of liquidity. So if you're following me on Twitter, on my personal account, I love to use these volume gaps, and we post them on TrendSpider all the time as well, on the TrendSpider Twitter account. But for me, I really like to focus on the volume gaps, the volume shelves, and the supply zone. So a lot of the time you'll see the green, the orange, and the red, which is highlighting these different kind of supply and demand zones. So all in all, Boeing really needs to get pretty much close above this 241 area. And then we could really start moving quickly through that volume gap to around 250 above. CCIB is getting mentioned quite a bit too, so let's look at that one. CCIB had a good day today, so yeah, we can definitely look at that one. Here's another example of the Launchpad volume shelf. So you can see here that over the last couple weeks, we've been, or I guess month and a half or so, we've been trading right at this volume shelf. You see a lot of volume aggregating here, and you can see what happened. We launched off of it. We pulled back, very similar to what I was just talking about on NNOX. So you move up, you test the anchored VWAP above, you pull back to the volume shelf, and then you start the move up again. So if we were to move up and continue up on CCIB, your anchored VWAP right around $30, which is also psychological level, would be your target above, at least in the short term. Now, on the daily chart, you can see here, let me clean this up a little bit. On the daily chart, we're just, we were just kind of hitting a higher low here over the last couple of days. So it's not really shocking. Prices don't go straight up, and if they do, they usually come straight down a lot of the time, unless you're in a meme stock the last couple of months. But all in all, I mean, this isn't really anything more than just a pullback on a higher low. And so one thing you definitely want is a break above that previous high. That would be kind of your trigger for a bigger move to the upside if you did close above this 2980 area above. So that's CCIB daily versus the weekly. One that I'm going to go over really quickly is VISL. This is one that I have a position in. Just going to kind of show you guys my thought process here. So if we're looking at the daily chart, you can see this is getting very, very tight. So I'm not going to turn on the volume by price yet because we're going to turn that on a higher time frame. But I'm liking VISL. One, as I mentioned, I think IWM and small caps are going to start moving higher. I personally will not buy or trade anything below a $100 million market cap because a lot of the time technicals kind of go out the window. You've got a lot of kind of shenanigans going on with these lower market caps. You have a lot of weird liquidity issues as well that can go on. This one's pretty liquid, so that's why I do like it. I like it for a couple reasons. One, the Olympics are coming up. I think there could be some type of speculation around, just VISL being able to use their technology somehow within the broadcasting side of things. But on top of that, it's a pretty solid technical setup. This is the daily. We're getting very close to the apex of the symmetrical triangle. On the monthly side of things, this is what I'm really kind of focusing on here. If we anchor the volume by price from this COVID low point here, you'll see that we've got the volume shelf forming. So move it all the way to here. You can see that we're trading right at this volume shelf here. You kind of have this cup and handle formation also forming on VISL. So that's something to keep in mind. One thing to also keep in mind on this stock, they like to dilute. Now, I think they got new management, so maybe that will change it up. But, you know, there's a reason why this this stock looks like this. It's because they constantly dilute. So, you know, maybe the tides have changed a little bit. Maybe they're getting their act together. But, you know, on these spikes, my target is probably around $4 to $4.50. And I don't know if they're going to dilute, but I'm not going to take the chance either. It's a pretty concentrated trade I'm in. It's a pretty big position. So if I can get the 4 to 425 area, I'll probably start scaling out, you know, around there. So we'll just have to see what happens. A lot of people are trading options on this. And, you know, my question is, why would you trade options on a $2.60 stock when you pretty much buying 100 shares of it is pretty much an options contract? So, I personally have a rule. I will not go trade options, and I don't trade them that often, but I sure as heck won't trade options on a stock less than $10, a lot of the time even $20. So just keep that in mind. If you're wondering why, you know, VISL didn't work out on your short-term calls, it's because there's a lot of volatility here. The implied volatility, I'm not sure exactly what it is, but I'm assuming it's pretty high. You always have to look at the implied volatility on any trade you're in. Same thing for Wish. Right? The implied volatility is 160 on Wish. That's when you're selling premium. You're not buying premiums if they're at 160. That's like an option seller's dream to have an IV that high, and you're going to get IV crush, and that's how they just continue to bring in that money. So, Alex, their quantum receivers will be used at the Olympics, CEO said months ago. Well, we'll see. You know, that could definitely be the trigger point there. The technical setup, though, is there. Let's just delete all of this real quick, even though I'm gonna regret that here in about later tonight. But I do want to show you guys this. You've got this really nice symmetrical triangle forming. You've got the volume shelf there. Everything's kind of right in line, possibly for a nice bounce. Now, you always have to have a bearish thesis. If we start to break down through this volume shelf, we have a volume gap below. So if this does start to break down, you could move very quickly from around, let's say, 230 all the way down to around 160. So you have to manage risk on any position you're in. I would probably stop out on the previous low here, which is around $2. But for now, it's holding the volume shelf really well. The monthly, I like the fact that we haven't broke last month's low. That would probably be a stop loss for some people. So just keep that in mind on the VISL side of things. Now, going into let's see, there's a couple other ones that we got requested here. Well, wow, a lot of chats today. Thanks, guys, for joining. Holy crap. All right, Badar, I'm sorry if I messed up your name, had the first request. So we already went over Wish, HYLN. We can touch on HYLN. This one's kind of stuck for now. We did have this breakout here, and the reason why I liked it was because we had a monthly breakout. You can see here we've got the same type of setup that we just talked about on BBIG, where you've got this wick, and the wick is over 50% of the monthly candle. But then if you go to the raindrop, you'll see that a lot of that volume was actually focused within that wick, showing that there's conviction by buyers. Now, this is definitely a smaller company. If they went and tried to raise capital or something, that would definitely destroy the chart. Technically, I guess you could even drop all the way down to retest this resistance and then continue up. So that's something to keep in mind. Now, I didn't mention this on Wish, but I did want to point this out on the weekly chart for Wish. I mean, technically, all you're doing here, at least on the weekly chart, is you're just retesting this previous resistance here. So very similar to what I just mentioned on HYLN. Breakouts definitely retest the previous resistance lines a lot of the time. So is what's happening on Wish and HYLN? We'll have to see. But you know, two ones that are just kind of lollygagging around for now. I do like the fact though that if you look at the kind of the setup here on the weekly chart for HYLN, you've got kind of this little consolidation. I guess you can call it like a pennant dash flag here. We're kind of near the bottom of the flag. So keep that in mind on the weekly chart. Obviously, it's only Monday, so there's a lot of time left. But not a bad weekly candle trying to set up into midweek. A lot of people say they won't look at candles until they close. I am not that person. I like to look at candles as they're forming. I know Rob Smith and the Stratters like to use that approach as well. They're looking at the monthly chart as it's breaking down or breaking out. They're not waiting until the monthly candle closes because who knows? Maybe the move is over by then. So just keep that in mind. Tilray is another one. And this is one that I actually wanted to touch on just because I know a lot of people are in this one as well. Same thing here. We did break down through the symmetrical triangle shown by this red circle. But keep in mind that, as I mentioned before, you can have a volume shelf break down and then act as supply, and then the price continues to break out through it. So initially, you've got a lot of supply here around 18 bucks to 19 bucks. But if we do close above this volume shelf, that's when this could act as a launch pad for price, excuse me. So we've got about 8 minutes left. So let's try and see how many we can get through. X had a nice day today. Same thing if we're anchoring the volume by price, even from these lows back in 2020 in March during COVID, you can see we've got this volume shelf forming here. So we are starting to break through these previous highs here. So 2470 did get broken to the upside. This looks very similar to that UPST chart that we looked at, where you pretty much had all of these highs in a row. So the fact that we are breaking through these highs, that's something to consider. X is a steel company. If the infrastructure plans continue to progress, this is not going to hurt X. So all in all, I'm liking this. I would anchor a VWAP from this swing high, and you can see that we closed right at it today. So you definitely want to close around, you'd want to close above 25.10 or so. Let's see if there's any names that are being asked more than once. So Boeing, we went over that one. SPCE, I mean, talk about a classic sell the news event. This looked really good until old Richard Branson pulled some shenanigans and dumped 10 million shares on the market. So, as I mentioned before, anytime you have an offering, that's going to mess up any technical setup. So if we do continue down, definitely watch the swing low anchored VWAP on SPCE. And you can see here that we almost tested it today. And you can also see, what do we have? We have a volume gap. We have an area where you didn't have a lot of liquidity below, and that's why the price was able to drop very quickly. So these volume gaps work to the upside and the downside. So just keep that in mind. They really, really can help you get an edge in the market. Let me see here. Let's see, Snap. I guess quite a few people are asking about Snap. So let's look at Snap. And that's what I'm doing, guys. I'm just going through the chat, and I'm looking to see, what's being mentioned a lot. So Snap and SQ have been asked about multiple times, so we'll touch on those, and we'll see how much time we have. Snap, if we're anchoring the volume by price from the swing low here, you'll see here that we had a nice bounce off that area. If you look at the anchored VWAP, it's right in line with that volume shelf as well. You definitely want to use the anchored VWAP and the volume by price together. You're going to really find some interesting setups here where you've got confluence. Notice here on Thursday, we moved right down to the volume shelf and the anchored VWAP, and then we launched off that anchored VWAP and volume by price the next day on Friday. So Snap, another thing, notice where we pretty much got rejected, right at the bottom of this break-even supply zone. So these areas are just raw supply and demand. You'll see here that we actually tagged this anchored VWAP from the high, and so that was going to be your initial resistance. Anytime you have a break-even supply above, you always have to anchor a VWAP from the swing high to make sure that you're not going to have to deal with that initially. So that is Snap. SQ is being mentioned by the same person quite a bit, but we've also seen a lot of people asked about SQ other than Omar. Thank you, Omar, for being consistent there. SQ, let's look at SQ on the weekly. There's too much noise on the daily here. So, I mean, if you look at the volume by price from the COVID lows, you can see a lot of volume holding here. You've got a big volume shelf. I wouldn't say the strongest, I wouldn't necessarily say the strongest setup here. We've kind of got 3 weeks in a row where the price has done nothing. So, you know, keep that in mind. I'm not sure if they have earnings or anything coming up, but definitely, you know, keep that in mind. On the monthly side of things, you'll see here that if we anchor the volume by price, you'll just be able to see the anchor point a little easier here. So here's your capitulation. Here's your volume shelf. Looks pretty good to me. You got a strong June close. You've got a nice volume shelf forming here. And sometimes you've got to zoom out. You can't look at the daily. There's just too much noise there. So in this case, if you are looking at SQ on the monthly, you've got a really nice potential launch pad forming here. Quite a bit of volume. Just in general, we've been pretty much consolidating and trading within this range for like 8 months now. So something's got to give. If I were to guess, I'd probably say we do break the 282 high. That's really what you'd want to look for, is the break of this previous all-time high here. All right. Well, that's all I have for today. PayPal is one a lot of people were also asking about over the weekend, so we'll just look at that. I have a target of 310 on PayPal for this week. The reason is simply because this is your previous high. So we had the nice launch pad here. I'm not sure who asked about you know, the win rate for these volume shelves, but I think we've gone over quite a few that have worked out really nicely once prices respected this area. So here's another case study on that. Volume shelf forms, you have consolidation for a couple days, you've got your breakout and your launch, quote unquote, launch off that area. So yeah, the target would be 309 to 310 today. And that is all the time I have, guys. It's 3:59 Denver time, 5:59 Eastern time. So that is all the time I have. Thank you, everybody, for coming in. We had a ton of people in here today. Holy crap. I think we had like 270 people at one point. So hopefully this is helpful for everybody. I will try to post those supply and demand videos later tonight. They're just 2 videos, but I can try to maybe work on some more content around that, because I do think understanding supply and demand is probably one of the most important things you can really understand in the markets. And whether you're trading, investing, whatever it is, understanding the basics of supply and demand is really going to be important for your success. So thank you, everybody. Really appreciate it. I love doing these, and really appreciate everybody joining. And we'll see you next Monday. I'll hand it back off to Mr. Spencer.